Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Once again, very good morning. Today will be Wednesday, the 28th of February 2024. So before we start our Daily Dose, as usual, the disclaimers portion of it first. So leverage trading carries a high degree of risk and may not be suitable for everyone. Losses could exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight to the short-term technical outlook on the various broad-based asset classes, let's have a recap of what has taken shape yesterday overnight, that means i.e. during the European and US session, and as well as today early Asia session. So let us start with the overnight session first. In overnight session, market seems to be rather lackluster in terms of their movement, not much volatile movement. So the major US stock indices managed to actually close slightly positive after both the S&P and the 500, now Nasdaq 100 inch in negative territory in the first half of the US session, but both of these broad-based indices managed to end slightly higher towards the close of the session. The only one that is underperforming will be the Dow Jones Industrial Average. So have a quick recap over here. What do I see in the indices? So over here in the Dow Jones Industrial Average, actually underperformed within the major US benchmark indices space. So the Dow Jones was down negative 0.25% due to one of its key component stock that is actually bleeding yesterday, which is United Healthcare. And while the rest of the indices, the S&P marginal gains 0.17%, Nasdaq 100 0.21%, and the outperformer is the Russell 2000 positive 1.34%. So overall, what we could see over here is that yesterday's we call it a performance within the major benchmark US indices, I would say is more likely in a kind of a minor consolidation within its short-term uptrend phase that is still pretty much intact. Then over here, if you look at the dollar index overall as a whole continue to remain soft. If you look at it over here based on the dollar index chart that I share with you all, so the dollar index at this point in time going to remain soft at this point in time. Yes, almost unchanged yesterday, going to retest the 200-day moving average, which is a pretty much key near-term support level. Okay, at 103.70 level that was tested one time, two time, three time, four time in the past 4 sessions. So this level going to hold at this point in time to maintain a bit of what I call neither here nor there movement in the overall FX space. All right, so that means you see some of the major FX pairs exhibiting signs of dollar weakness, but on the other hand, some of the FX pairs are just showing signs of dollar strength, at least in a short-term basis, due to the past 3-4 sessions that is being tested. The dollar index being tested on the 200-day moving average, holding at support at 103.70 level. Then overall, what I could see over here is that the US 10-year Treasury yield, okay, continue to struggle below the 4.33%. We call it key resistance level. Okay, so it's a key major resistance level. So this is a lower limit of the key major resistance level at 4.33%/4.5%. So it's going to struggle below the lower limit of this major resistance zone that I highlighted over here in my screen. So what I could see over here is that the first support level to watch will be at 4.14% on the US 10-year Treasury yield. So until it breaks below 4.14%, then we could see much more downside momentum coming into play. So a break below 4.14% as well. That's the US 10-year Treasury yield. So that could actually potentially it has an interlink between two major asset classes. Firstly, will be broad-based dollar movement. So we know that a breakdown below 4.14% on the 10-year US Treasury yield could potentially lead to a shrinkage of the US Treasury yield premium against the rest of the world. So that could actually add a bit of more substantial downside movement on the dollar. That means, i.e., dollar weakness coming back into the market. That what we see in the last quarter of last year. One thing for sure that we know that this push up in the last few days that is testing the 4.33% comes with the lack of upside momentum. How do we decipher that? Because by looking at the corresponding price movement of the daily RSI that is shaping lower lows. All right, lower lows so far. Okay, so and also on the hand, if you start to see a breakdown below 4.14%, that could actually have another indirect inverse linkage to gold, spot gold XAU/USD. So that actually explains why spot gold XAU/USD continue to be pretty much firm above a key support level at 2022 level, but still can't break above the 2042 range resistance. So definitely for sure a breakout for spot gold at 2042. We need to have the US 10-year Treasury inch much lower below 4.14%. Why? Because as you know that spot gold itself, if you hold on to spot gold, it's actually a zero yielding asset classes. That means it will not give you dividend, it will not give you an interest income. That means for sure a lower US 10-year Treasury yield implies a lower cost of holding gold. So in order for gold to actually stage a much more substantial rally, the 10-year US 10-year Treasury bill got to inch much lower below 4.14% for now. All right, so this is the clear intermarket linkage across the broad-based asset classes. So let me share with you all the performance of the S&P heat map before we jump into the Asia session key events to look out for. What we could see over here is that this is the one healthcare. This is the United Healthcare Group. The weakest performer inside the S&P 500, but this United Healthcare Group is actually the largest component stock. I believe it's one of the top two, either one or two, I can't recall. That is down negative 2.27% yesterday. So that actually explains why the Dow Jones Industrial Average underperformed yesterday. Yes, but even though we see intraday underperformance, but we got to decipher its short-term trend from a technical analysis perspective that I'll share you later. Is it still holding on to key pivotal support before we could say that that short-term trend is the game over? Okay, so for now, overall, we see more greens coming into play. And what was surprising over here is that the mega cap stock is still holding rather firm, especially Apple managed to inch up 0.81% yesterday. Okay, so what happened in Apple over here is this. So Apple actually come up with a positive news flow is that Apple management decided to wind down their electric car adventure. If you know, for those who follow Apple, we call it business plans very closely, we know that Apple in the last 5 or 6 years decided to actually join the race of EV together with Tesla, but they are actually much of a kind of a laggard itself. So it seems to me that after years of pouring millions into this adventure, they decided to actually, in fact, it's a decade long, close to 10 years, decided to wind down this electric car effort. And right now, resources are being deployed onto Apple AI division, which is the kind of the in thing right now. So that actually could actually explain a reduction of unproductive business adventure going into the current, we call it much more favorable, we call it a business adventure, which is pretty much skewed towards indirectly or directly on the AI space. So that actually explains why actually Apple stock managed to actually pop up yesterday. Okay, so now today's Asia session will be primarily on the FX market. So on the FX market over here, I want to share with you all there's one surprising outlier movement, which is the Aussie, the Kiwi. So what we could see over here is that the Kiwi is the greatest underperformer so far today during the Asia session. So on a 5-day rolling basis, the dollar actually, that means i.e. on the flip side, the dollar actually strengthened the most against the Kiwi, is up 1.06% based on the 5-day rolling performance as of today right now. So what's actually driving this Kiwi weakness against the dollar is due to a slightly less hawkish tilt from RBNZ. So what's RBNZ? RBNZ is the central bank of New Zealand. So today, early morning, RBNZ has the first monetary policy meeting conclusion for 2024. So yes, they maintain interest rate at 5.5%. That is their policy rate. But however, they give a slight hawkish guidance in terms of projecting their policy rate. In short term, they call it OCR going forward. So they reduce down their policy rates. That means if you could, I could share with you all this screen over here. Okay, so this screen, okay, if you see my screen, okay, okay, so just focus on this screen. Hope that you guys could see. Let me expand it bigger so that you could see. All right, yeah, here. So OCR is the official policy rate. So now it's at 5.5%. So what they did over here is that they reduced it slightly, 5.59% in June 2024. The prior meeting, they were projecting at 5.67%. So that was actually close to about what 15 basis point more. So initially, at the previous meeting before 2023 ends, so that's in November, the RBNZ actually still forecast at least one interest rate hike in 2024. But with the reduction of the cash rate at 5.59% in June 24 from 5.67%, that potential interest rate hike in 2024 has been greatly reduced. And also, they are looking for a much more dovish tilt in 2025. Based on what we see over here, previously it has a prior 5.56%. Right now, it reduced to 5.47%. So the chances of having the first interest rate cut to come in early 2025 has greatly been increased. So what we could see over here is a slight hawkish, a reduction of a hawkish vibe from RBNZ. So that causes the Kiwi dollar to weaken significantly against the dollar. So as we know that the Kiwi has a strong correlation with the Aussie, so that will also explain the ongoing dollar strength against the Aussie dollar as well. So if you look at the screen over here, so I could see over here, you see the dollar Aussie. That means the dollar strength also catching up against the Aussie dollar, where yesterday we also do have a bearish tilt for those who actually follow our daily dose of market insight. As long as the Aussie dollar cannot break above 0.6560, which was tested in yesterday US session before smacking back down 20 pips at it's now trading at around 0.6530, 0.6540. So later we share the short-term daily technical insights with you all in a while time. And also I want to highlight another key event that's related to the FX space, especially the Aussie dollar, is early today morning there's this release of the Australia monthly CPI indicator, which came down below expectation. So market is expecting at 3.6%, but it went down below 3.4% year on year. So if you look at the trend of the monthly CPI indicator for the month of January, it has been inching significantly downwards since the third quarter of last year. Okay, look at the downward trajectory in terms of the inflationary pressure on a monthly basis in Australia. So that also add on this potential short-term downside pressure on the Aussie dollar that is playing out right now, given the Aussie dollar refusing to break above the 0.6560 resistance level. All right, so now with that, let us now jump straight into the short-term technical outlook. So let me start with the FX market first. So let me start with the major FX pair. So on the major FX pair over here, let us start with the euro dollar. Okay, so the euro dollar kind of traded sideways so far. Okay, let me expand my screen so that you guys could see. Okay, so the euro dollar actually traded sideways during the US session. So right now it's actually coming down a bit lower due to that kind of a dollar strength that's being seen play out in the Aussie and the Kiwi, but still holding above the 200-day moving average. So still pretty much unchanged. Right? I will still use a 1.0810 as my short-term pivotal support level. Still maintain that short-term bullish bias on the euro dollar. First resistance to watch for sure will be at 1.0890 for today, which correspond to last Thursday minus swing high, and as well as the 50-day moving average also acting closely as a confluence resistance at 1.0890. Only an hourly close below 1.0810 will kind of invalidate this short-term bullish bias to see a further minor corrective decline to test the next near-term support level at 1.0785 / 1.0760, which if you look at the Fibo retracement level, Oops, let me, okay. Okay, okay, it's close to the 50% and the golden ratio of 61.8%. Okay, now sterling dollar. So over here in sterling dollar, what we could see at this point in time is also going to inch back down lower at the Asia session, but still holding above this minor ascending trendline support level that I drew from the minor swing low of 16th of February. All right, slightly below this congestion area at 1.265660. Okay, so still no change. I will still use this 1.2610 level. So right now what I could see here is that the RSI managed to break down below this parallel support, inching towards the oversold level. So very likely we could see another sign of pullback over here today, slightly around this area. So any potential pullback managed to hold above 1.2610 short-term pivotal support, we will still maintain that short-term bullish outlook on the sterling dollar. First resistance level to watch for sure will be this minor range top that is in place since last Thursday at 127 figure level. A breakout above 127 figure level exposes the next intermediate resistance zone at 1.2740, 1.2760, which is this congestion this swing high congestion area of 15th of Jan to 2nd of February. Only an hourly close below 1.2610 will invalidate this short-term bullish bias to see the extension of this corrective pullback to test the next support level at 1.2540 slash 1.25 figure level on the sterling dollar. All right, so now what's next on the other Asia currency pair? So let's start with the Aussie dollar first. So the Aussie dollar continue to remain weak. So for those who actually join our daily dose of on a frequent basis, yesterday we flipped to a bearish bias because of the rejection at the 200-day moving average, and right now it's actually inching much lower below the 20-day moving average as well. So as long as 165.60 short-term pivotal resistance holds for now, okay, because I don't want to target so tight because we'll get whipsaw easily. So over here, okay, there's a near-term resistance today at this 65 40 level, okay, 65.40, which is today's Asia session high before it collapses. All right, at this point in time. So I don't want to tie it so tight at 65.40, still using 65.60 short-term pivotal support level, confluence with the 200-day moving average, also acting as a resistance at this area. As long as this pivotal resistance level holds 65.60, maintain that short-term bearish bias. Next support level to watch 65.50 followed by 64.70, which is the 50%, 61.8 Fibo retracement level and close to the 76.4 Fibo retracement level of the previous minor upswing from 14th of February to 22nd of February. Only an hourly close above 65.60 will invalidate this short-term bearish bias to see a squeeze up towards 65.80 level. Above 65.80 level potentially sees a test of the 50-day moving average acting as a resistance as well at 66.20 level. Over here we also confluence with the minor swing high area of 24th of Jan to 1st of February. That's the Aussie dollar. So for those who are looking for another kind of cross play pair play with this Aussie dollar against the Kiwi, we also can look at the Aussie Kiwi pair, which I drew over here as well. So the Aussie Kiwi pair, today's Asia session managed to see a squeeze up over here, but this squeeze up on the Aussie Kiwi pair, this 1 hour chart of the Aussie New Zealand dollar Aussie Kiwi pair, is coming close to the minor descending channel resistance that is in place since 23rd of January this year, also correspond to the minor swing high area of 16th of February, or acting as a resistance at around 1.07, also coming close to the 50-day moving average. So as long as this 1.07 short-term pivotal support holds on the Aussie Kiwi pair, we may see a bit of mean reversion back to kind of test this near-term support level at 1.0630. Only an hourly close above 1.07 on the Aussie Kiwi pair potentially will see a squeeze up towards the next resistance level at 1.0740, 1.0750. Right, now moving that with the last deal on the dollar yen. So the dollar yen continue to actually trade sideways below this short-term pivotal range resistance that we highlighted, 150.70, 150 80. So as long as this level holds, we expect to going to churn within a short-term bearish bias. First near-term support level to watch will be 105.05. That was almost tested yesterday. Below it exposes the 20-day moving average, also acting as a near-term support level at 149.60. Only hourly close above 150.80 will invalidate this short-term bearish bias within a range scenario to see a squeeze up to test the major resistance zone of 15140 / 15195. Okay, so that's pretty much sum up for the FX short-term technical outlook. So now let us move ahead with the outlook, the short-term technical outlook for the major benchmark stock indices. So let us start with Asia first, the Hong Kong 33, which is the Hang Seng Index. So the Hong Kong 33 managed to stage that pullback over here after hitting the first resistance zone of 1676, 16,860. So still no change. I don't want to type the pivot supports too tight at 16,550. So I'll still use 16,350. So as long as any potential pullback managed to hold above 16,350, we will still maintain that short-term bullish outlook on this ongoing short-term counter trend rebound scenario, with the next resistance level to watch after 16,860 will be at 17,010, 17,130 level, which is also confluence with the Fibo extension cluster, and as well as the minor swing high area of 28th of December and 2nd of January. Only an hourly close below 16,350 will see the extension of this a minor corrective decline scenario to retest the 50-day and the 20-day moving average, acting as a confluencing at the support zone of 16,140 / 15,950. We also coincide with the lower limit of this minor ascending channel that I draw from the low of 22nd of January. So net overall, as long as any pullback managed to hold above 16,350 short-term pivotal support on the Hong Kong 33 index, we will still maintain that short-term bullish outlook for this potential short-term counter trend rebound scenario to play out. Above 16,860 exposes the next intermediate resistance zone at 17,010, 17,130. The German 30. So German 30 was actually the strongest benchmark stock indices that we covered yesterday, piercing up very strongly, hitting 17,590, 17,630 short-term resistance that we highlighted yesterday, also the top of this minor ascending channel. So the RSI over here, nothing, there's no clear signs of a bearish divergence at this point in time. Yes, it's hovering at the overbought level. So potentially in today's Asia session or today's starts of the European session, i.e., pardon me, we may see a bit of pullback taking into place, coming into play. So as long as this pullback over here managed to hold above this tighten new short-term pivotal support level that I have today, 17,430. So as long as any potential minor pullback managed to hold above 17,430, we will still maintain that short-term bullish outlook on the German 30 to see the continuation of this minor impulsive wave structure. Next intermediate resistance to watch will be at the another Fibo extension cluster level, 17,680 / 17,730. Only hourly close below 17,430 will negate this short-term bullish outlook to see the extension of this minor corrective pullback towards the next support zone at 17,360, 17,290, which correspond to the lower limit of this minor ascending channel level as well. Major US stock indices. So let us start with the Dow Jones Industrial Average. So like I say at the start of my earlier daily news today, why the Dow Jones Industrial Average or the US Wall Street 30 underperformed among the US benchmark US indices yesterday was due to its top component stock, the United Healthcare, the shading around more than -2% decline yesterday. But overall, the pullback of the US Wall Street 30 seems to be stalling right at the short-term pivotal support that we highlighted since late last week at 38,770. So like I mentioned earlier, as long as 38,770 holds, the short-term uptrend phase of the US Wall Street 30 remains intact, and also mathematically also correspond to this upward sloping 20-day moving average. And what we could see over here very clearly, the daily the hourly RSI has already hit the oversold level and shaped a higher low right now. So indicating to us that potentially yesterday's minor downside momentum has more or less been abated. So what we could have over here is that we still maintain that short-term bullish outlook as long as 38,770 short-term pivotal support holds for now. First resistance level to watch will be at 39. Okay, first resistance to watch for today. Okay, I will have yesterday's minor swing high area at 39,100. Above 39,100 exposes the next near-term resistance at 39,400 level. Only an hourly close below 38,770 will invalidate the short-term bullish outlook to see the extension of this minor corrective decline to test the minor swing low area of last Thursday, and as well as the congestion area of the previous Thursday as 15th of February, acting as a support zone, next support zone at 38,430, 38,360. So net still maintain that short-term bullish outlook on the US Wall Street 30 as long as 38,770 short-term pivotal support holds. Nasdaq 100. So over here, the Nasdaq 100 going to trade sideways, but holding above the near-term support level at 17,810. But I don't want to squeeze it so tight at 7,810. Still using 17,650 as my short-term pivotal support level. Maintain that short-term bullish outlook. Next resistance to watch, level to watch after 18,030 will be at 18,220, 18,270. Only hourly close below 17,650 will invalidate the short-term bullish outlook on the Nasdaq 100 to see another leg of minor corrective decline to retest last Thursday's swing low area at 17,350, where the 50-day moving average is also coming close to as a resistance level, similar support level as well at 17,350. Okay, that's pretty much sum up for the major benchmark stock indices. Okay, one more to cover with the Japan 225, pardon me. So the Japan 225 continue to actually trade sideways below 39,510, 39,600. So overall no change. Right now for today, Asia session managed to retest and shape a minor bounce right now, right at the minor ascending channel lower limit that I drew from the low of 7th of February. And also what I could see over here is that the hourly RSI has started to shape a higher low as well. So indicating to us that a signs of what I call potential upside momentum creeping back into the market for the Japan 225. So as long as the 38,385 short-term pivotal support holds, we will still maintain the short-term bullish outlook of the Japan 225. First resistance to watch for sure will be at 39,510, 39,600. Above it exposes the next resistance at 40,090. Only an hourly close below 38,850 will negate this bullish tone to see the extension of this minor corrective pullback to unfold to test the next support area at 38,450, 38,100 level. All right, that's pretty much sum up for the short-term technical outlook on the major stock indices benchmark globally. So all of them are still holding above their respective benchmark, respective short-term pivotal support level. Okay, so let us start with oil price. So WTI crude oil going to churn higher yesterday, but still managed to hold slightly below the short-term pivotal resistance level of 78.40, 79 level. So what's this level? A recap is actually the medium-term range, symmetrical range resistance that is in place since 15th of November. So net overall, as long as this 78.40, 79 pivotal resistance holds for today, we will still maintain that short-term bearish outlook on West Texas oil within this symmetrical triangle range configuration. So right now, potentially a kind of a mean reversion scenario is likely to take shape after the RSI hit the hourly RSI hit the overbought zone and managed to exit from the overbought zone during Asia session today. First support level to watch for this bearish mean reversion scenario to play out will be at yesterday's minor swing low area at 77.50. A break below 77.50 exposes the next support zone at 76.20, 75.75, which also corresponds to the 20-day moving average. However, if we see an hourly close above 79 figure level, then this bearish buyers mean reversion scenario will be invalidated to see a further squeeze up towards the next resistance at 79.80. Above 79.80 exposes 81.65 resistance next. So that's the outlook for the West Texas oil. So as long as 78.40, 79 pivotal resistance holds, we will still maintain that short-term bearish mean reversion outlook for it to reintegrate back into the medium portion of this medium-term symmetrical triangle range configuration that is still playing out since 15th of November last year. Then lastly will be a spot gold. So like I explained, spot gold managed to hold firm because we do not see the 10-year US 10-year Treasury didn't break above the 4.3% level. So for spot gold going to churn between still holding above the near-term short-term pivotal support level of 2020, but in order to see the upside to gain more traction, it got to break above 2042 to expose the next resistance level at 2059, 2064, which is the minor swing high area of 5th of Jan and 2nd of February. All right. However, if we start to see a breakdown below 2020, that will actually invalidate our short-term bullish bias to see another round of choppy minor corrective decline scenario to take shape. Next support level to watch will be at 2011. A breakdown below 2011 exposes 1965. All right, so that's pretty much sum up the short-term technical outlook on the various cross asset classes. So now, before we go, let us take a look at the calendar for the key events to look out for that could actually add a bit of increased volatility into the global markets later today. So the rest of the Asia session will be pretty much quiet. So over here during the European session as well, we do have one data to look out for, will be consumer inflation expectation in Eurozone for February. So that will be out at 6 p.m. Singapore time. And over at the US session, will be pretty much quiet because this GDP growth rate for second quarter is more like a estimate. It's a second estimate, it's not a first estimate. So that number should be more or less the same as the previous estimate. And what we could see, we have pretty much quiet during the US session, except for the fact that during 1 a.m. Singapore time to 1:45 a.m. Singapore time, you will see a slew of Federal Reserve officials speaking, Bostic, Collins, and Williams. All right, and at the start of very early Asia session tomorrow at 7:50 a.m. Singapore time, we do have Japan retail sales, so that will give a gauge of consumer spending in Japan. So market is expecting a further recovery to 2.3% year-on-year, above 2.1% that was recorded in December. Okay, so that pretty much sum up for today's daily dose of market insights. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.